Good morning and welcome to another video by Rideshare UK, the channel that actually goes under the skin of Uber. And this video we're going to do exactly that. We're going to go under a layer of Uber's skin. Right, you all know Uber goes public next week on the 8th. But what I want to talk to you about what happened last week when Lyft, their competitors, went into the market and how their shares actually have just plummeted over 30% in a week or so. And on this video we'll try and explain why Uber plays a big part in the reason why Lyft shares have just plummeted. Right, firstly, for the guys in the UK, a quick background to Lyft. They're the second biggest ride sharing company in America, but they just purely operate in America and Canada, so still a very big, massive market out there. They were formed 3 years after Uber came along. They hold a market share about 30 to 40% of the markets in America. Now, Uber does a lot, probably about 10 times more rides than Lyft. But at the same time, when you look at the growth chart, you know, Lyft has a better growth structure than Uber does itself. But what I'm going to not try and do in this video is go into the numbers game here. Purely, if you're looking at, say, price over sales ratio, both of these companies are overpriced. But the reason I say that is because I want you to understand one very, very important factor here. The price is actually based on future speculation. Right? They might be overvalued, but it is actually based on future speculation. So let's talk about how Lyft rose to fame on Uber's back, and then we'll talk about how Uber is coming back with a vengeance on Lyft. Now, let's imagine, you know, you are going through a forest of the rideshare industry, and Uber's right at the front. They're the one that's actually cutting the trees down, the bushes down, and at the same time, you know, they're the ones actually getting all the cuts and the bruises whilst in the process. And Lyft have been quite conniving here. They followed in the trail and picked up all the bits and pieces to become a very successful company at the same time. But let's not take everything away from Lyft here. They have been quite creative. They've used they had a lot of these initiative thinking behind them that worked out really well in the process. So what is Uber best known for? Yes, that's killing off its competitors. So, and Uber wanted this all along. They knew exactly what Lyft was doing all the time. So what was the process? Well, let's talk about coming onto the market itself. Uber announced they're going to go public, and Lyft surely followed. But Uber kept delaying and delaying, and at the same time Lyft also did the same thing. They held her back, and Uber was coming out with loads of, you know, silly excuses why they can't go public. I mean, one of the things, the last one was they couldn't go public because of the public shutdown in America, the government shutdown, sorry. You know, and that is all wrong, because they could have easily done that. The market wasn't closed. Everyone still carried on normally. Only affected people that was recruited was working for the government themselves. So that's a myth at the same time. So, but it worked, and then Lyft took the plunge. So that's what happened. Lyft went public, and at the same time Uber unleashed the publicity manager. He was set loose. Uber stock on the first day did quite well. It went high, but then the short sellers came in to knock it down again. That's what you see the first couple of days trading is all about. But that wasn't it. The main thing was Uber. They rolled out their bad publicity truck out. Firstly, they were saying, look, I think we overvalued ourselves. I don't think we're worth 120 billion. I think we're worth about 90 billion. But at the same time, who do you think was taking that effect? Yes, the Lyft shares. People are thinking, hold on, you know what I mean, doesn't that mean Lyft overvalued itself at the same time? And obviously Uber's not trading, so whatever they rolled out, that wasn't going to really have an effect on them. They were saying things like, you know something, I don't think we'll ever make any money. And you know, you've got a big massive company here that's come along and saying we will never make any money out of this. And guess at the same time who's taking that knocking? The Lyft shareholders. This driverless car thing, I think is just a dream. And again, Lyft are paying for this. They are paying severely for this. Every time a news goes out from Uber's camp, Lyft share price takes a dive. These workers' right, you know, that's going to cost us millions. Lyft shares next day plummets again. We think there's other competitors coming into the market, the likes of Sony. So we have to be very, very careful now. And all this is having a very, very bad effect, share price effect on Lyft. It's come to a stage now where the investors are actually taking Lyft to the courts, saying, look, you have misled us here. You know, I don't think you're valued that much. So what I'm saying in this video, for the next week, I want you to keep an eye out for some more bad news. And all those bad news, it has nothing to do with Uber. Well, it has everything to do with Uber, but the knock-on event is all in the name of Lyft. Bye-bye now.